Hey everybody, Boris speaking at Forex. Welcome to our weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for August 13th to August 17th, 2018. And the story in the common dollar land was very similar to the one in the major land. We had some big, massive moves with key levels get taken out, especially on central bank risk. RBNZ essentially came out with a much more dovish than expected outcome or view, signaling to the market essentially that they were tilting more to the downside than to the upside, as they were seeing tremendous amount of risks in the global economy, in the internal economy of New Zealand as far as growth goes, and saw very little threat from the inflation front, but did see some slowdown on the growth front, which suggested that they were just as open to the idea of cutting rates as they were to the idea of hiking rates. That in turn just decimated Kiwi, took out all the big long-term support levels at 67, and created actually a big disparity between Aussie and Kiwi, because the RBA came out this week essentially supportive. The statement from RBA was certainly much more balanced than the one from RBNZ, and the Australian economy, surprisingly enough, has not really had as big a shock because of the global trade war as the New Zealand economy has. So it was fascinating. Basically, the story on the Antipodean front was that Kiwi still remains relative weakness, Aussie still remains relative strength. And amongst all of them, though, the most interesting and, of course, the strongest relative strength story for a long time has been dollar CAD. The Canadian economy, surprisingly enough, despite the NAFTA problems, despite the new brouhaha with Saudi Arabia, continues to perform much better than the market anticipates. We had labor data come out this Friday. And although the full-time jobs were worse than the part-time jobs, overall, still a much stronger result than the market expected. And I think it's sort of a testament to the fact that the Canadian economy is much more balanced and more service-oriented than it used to be. It's not just simply a pure resource economy that it used to be before. As a matter of fact, I read somewhere that the greatest amount of high-tech employment in the world now, much more than in Silicon Valley, is now in the Greater Toronto region. And that's, I think, testament to the fact that Canadians have done a very good job of attracting very, very high-end, high-tech talent into their country, and that probably is going to pay off dividends for the economy going forward. So overall, CAD remains relative bid. Furthermore, and this is the interesting part, supported by the fact that oil prices just are not budging. They're still staying in the high 60s, and there's a potential here if there's a greater exacerbation of hostilities between U.S. and Iran, that oil could go back up over 70 as markets are going to start to fear lack of inventory coming out of Iran. So overall, the Canadian story remains kind of the most relative bid story on the common dollar front, with Aussie next and Kiwi just really mopping up the rear. Let's take a look at the calendar. And before we take a look at the calendar, let's take a look at the levels. The levels have certainly moved down. Aussie, which was 73 bid, that got broken down. Now we're at 71.50 as support. CAD moved up a little bit, but really has not, this is the key thing, has not tested the upper end of its range, the weakness part of its range at 133 or higher. And that is, again, a testament to the fact that Canadian dollar is stronger than both of the other common dollar pairs in this trifecta. And finally, the Kiwi just decimated, really decimated. The 67 is gone. We're now looking at 65 as support. It's by no means a stretch of imagination that we could see 65 this week if we get further risk-off flows as the week progresses. Now, looking at the calendar, not much as far as data set, except for Australian wages and labor data. That should be interesting, actually. We're mildly bullish Aussie, which again brings up the factor that Aussie Kiwi still remains an interesting buy trade. We're going to discuss that in the crosses section of the videos, but it basically plays to the idea that there's still more upside in the Aussie Kiwi trade because Australia continues to outperform New Zealand as far as the data set goes. This is the wage price index. The Wednesday is the Australian index. Yes, I'm sorry, I got confused on two. But we're both bullish both because we see that strong construction numbers kind of outweigh the weaker services and manufacturing data. And generally, Australian data has been a surprise to the upside most of the time. So we're going to be looking for an upside as well here. Aside from that, the Canadian CPI data, We're actually bearish that because there's a big drop in price component of the IV PMI. But unless we unless we have a massive variance from perception, so the core is going to be 1.9. If it comes in like 1.9, I don't think it's going to be a big deal. If it comes in 1.8, that perhaps could have negative ramifications on dollar CAD. But as I said, dollar CAD is really trading much more on oil prices and relative strength trades. So we'll be watching that very carefully as we go forward. Other than that, there's really nothing on the comp dollar front. It's essentially really the two main event risks this week is Australian employment and Canadian CPI data. Let's take a look at the charts, see how the chart's set up. Let's take a look first at Aussie, which did break the very, very key support here at the 73s, ended up on the lows of the week, so certainly not a positive sign. But as they say, in the land of the blind, one-eyed man is king. And on a relative basis to the Kiwi, it actually still looks better. If you look at the longer-term support factors, it still has that massive support 7150 from 200 to 216, and that's really what we're looking for as the ultimate support on the Aussie. Looking at the Kiwi, and this is really where, look at this, just massive downward move in the Kiwi. And the thing about the Kiwi, and this is from a technical point of view, I think is fascinating, is when you have these big bust out candles, whether to the upside or to the downside, where the ATR of the candle is 2-3 times of the prior ATRs, they tend to have continuation. It is not a one-time event. So if you look at this candle over here, there's we broke low was what 69, basically it's 70. It extended all the way down to 67, another 200 pips. If you look at the trade to the upside over here, it extended 300-400 pips to the upside. The point being, if you look at the downside here, it extended at least 200 pips to the downside. If you look at all of these factors, there is just very strong level of confidence here that we're going to push towards the 65 level. And perhaps even the full level here is really 64, right? 63.40 is the low as the potential support area here, which was what makes Kiwi the wounded bird, to use a very lame little metaphor, of the currency market. And that's why I think there's just more continuation trade here. Certainly we have potential to get 65 this week as risk-off flows continue. Dollar CAD, on the other hand, not a big move to the upside. If we look at the dailies here, it kind of brings it more into the forefront. Yes, we held the 130 dollar CAD. We love the dollar CAD to the downside all the way down to 130. As I said, 130 was going to be pretty much the end of the run. But now the move back up, this is going to be very interesting to see, because really what you're looking for is to see if you can hold the 32.80 highs. If the pair can't clear beyond that level, that's a bullish construct for Canadian dollar, because it would suggest a series of lower highs, failed highs, and perhaps a retest back down to 130. Overall, it basically suggests that dollar CAD should be a relative strength trade this week, and perhaps even a trade that we'll discuss in the crosses of maybe trading CAD against one of the crosses for a possible relative strength move into next week. But other than that, that's pretty much on the calm dollar land. We definitely got hit very hard. Certainly have more downside protection, downside movement to go here. And the order of weakness very much remains in place. Kiwi the weakest, Aussie the second weakest, CAD the strongest in the calm dollar land as we enter the week. Wish you guys the best luck, the best trading. Boris Landsberg over and out.